Imagine waking up to find that a stock you've been watching just lost 17.5% of its value in a single day. Nearly $5 per share. Gone. Over 43 million shares traded hands as panic spread across trading floors. But here's where it gets interesting. There was no earnings disaster, no executive scandal, no product failure. This is Applied Digital, a company sitting on $16 billion in signed contracts, building the massive data centers that power every AI model you've ever used, from ChatGPT to Claude. This stock has exploded over 228% in the past year, and analysts still rate it a strong buy with targets suggesting another 30% upside. So why did investors run for the exits? With 32% of the company's shares sold short, extreme volatility shaking the entire AI infrastructure sector, and billions of dollars hanging in the balance, this isn't just about one stock's bad day. This could be an early warning sign for the entire AI boom, or it could be the buying opportunity of the year. In the next 8 minutes, I'm going to break down exactly what triggered this market shock, reveal what the smart money is doing behind closed doors, and show you what to expect next. Because whether you own this stock or not, what's happening to Applied Digital right now is a preview of what's coming for the entire AI infrastructure revolution. Let's dive in. Applied Digital Corporation, trading under NASDAQ ticker APLD, just experienced one of its most dramatic weeks in 2025. On December 15th, the stock plunged 17.5% in a single day, dropping from around $28 to $23. But here's what's fascinating. This isn't your typical market crash story. This is a high-stakes drama playing out at the intersection of artificial intelligence infrastructure, billion-dollar contracts, and extreme market volatility. Today, we're breaking down exactly what happened, why it matters, and what investors should expect next. Stock 1. The shock. Let's start with the numbers that got everyone's attention. Applied Digital closed at $22.98 on December 15th after losing nearly $5 in value. Over 43 million shares changed hands, well above average volume. The stock that had surged over 228% in the past 12 months suddenly hit an air pocket. But here's the twist. There was no single catastrophic company announcement. No earnings miss. No contract cancellation. Instead, this was a momentum unwind, a perfect storm of profit-taking, valuation concerns, and options-driven turbulence hitting one of the market's most volatile AI infrastructure plays. The stock has a beat of approximately 7.1, meaning it moves 7 times more than the overall market. When sentiment shifts in AI infrastructure stocks, APLD doesn't just move, it swings. Stock 2. Who is Applied Digital? To understand this shock, you need to understand what Applied Digital actually does. They are not building AI models or designing chips. They are building the physical infrastructure, the massive, power-hungry data centers that make AI possible. The company started as a crypto mining infrastructure provider called Applied Blockchain, but pivoted to AI data centers in 2022. They are now constructing what they call AI factories, purpose-built campuses optimized for GPU-dense, high-performance computing workloads. Their flagship project is Polaris Forge, located in Ellendale, North Dakota. This isn't a small operation. We're talking about data centers consuming hundreds of megawatts of power, enough to power small cities. Their first building just reached full 100 megawatt capacity, and they are building toward 400 megawatts at Polaris Forge 1 alone. Applied Digital has secured approximately $16 billion in long-term lease agreements, primarily with CoreWeave, an AI-focused cloud provider. These are 15-year contracts bringing predictable revenue as capacity comes online. That's the bull case in a nutshell. Massive contracted revenue, positioned at the heart of the AI boom. Stock 3. The bull case. So why do analysts remain optimistic despite the recent drop? The consensus rating is strong buy with an average price target around $29, representing roughly 30% upside from current levels. Some targets go as high as $43. First, the market opportunity is enormous. Hyperscalers are expected to invest $350 billion in AI data centers in 2025 alone. The bottleneck isn't GPU supply anymore. It's power-dense data centers with advanced cooling that can handle AI workloads. Second, Applied Digital is executing. They've completed Phase 2 at Polaris Forge, bringing 100 megawatts online. They recently invested $25 million in Corinthus, a Swiss firm developing advanced chip-level liquid cooling technology that could support 3 times lower temperatures than standard systems. Third, the revenue visibility is real. With CoreWeave and hyperscaler leases, management estimates around $11 billion of contracted lease revenue from Polaris Forge 1 alone over the next 15 years. Lease revenue is expected to begin recognizing in late 2025 and ramp through 2026 to 2027. Stock 4, the bear case. Now for the reality check. Applied Digital is still deeply unprofitable. In the most recent quarter, they reported $144 million in revenue, but a loss of $234 million. Their free cash flow is negative by nearly $1 billion over the trailing 12 months. The valuation is extreme. At a price-to-sales ratio above 40 times and an enterprise value to sales over 55 times, APLD trades at multiples typically reserved for high-margin software companies, not capital-intensive, loss-making data center developers. Here's the structural risk. This is a capital-hungry business model. Applied Digital carries $687 million in debt against just $114 million in cash. They need continued financing to build out their campuses, and if interest rates rise or credit conditions tighten, that becomes problematic. Then there's tenant concentration risk. The bulk of their contracted revenue comes from CoreWeave. If CoreWeave or other major tenants face financial difficulties, those 15-year leases become questionable. Finally, execution risk is real. Building data centers isn't easy. Applied Digital claims to be compressing timelines to 12 to 14 months versus the typical 24 months. But delays, cost overruns, or technical challenges could derail the story. Short interest tells its own story. Approximately 32% of the free float is sold short, with days to cover around 3. That's a massive bet against the company. Stock 5. What triggered the drop? So what specifically triggered December 15th's sell-off? Multiple factors converge. First, a December 5th SEC filing registered 2.4 million shares for potential resale, warrant shares from an October issuance. While the company isn't receiving proceeds, it created an overhang perception, more potential sellers in the market. Second, options activity exploded. Nearly 69,000 options contracts traded with implied volatility spiking above 113%. That level of volatility creates mechanical selling pressure as market makers hedge their positions. Third, broader market rotation. After a massive run-up in AI infrastructure stocks through 2024 and into 2025, investors began questioning valuations across the sector. Applied Digital, as one of the most volatile names, got hit hardest. Fourth, insider selling earlier in 2025 had already planted seeds of doubt about whether insiders believed the valuation was sustainable. Stock 6. What to expect next? Looking ahead, here are the key catalysts investors should watch. First, earnings. Applied Digital's next earnings report is scheduled for January 13, 2026. Investors will be laser-focused on lease revenue recognition as Polaris Forge capacity comes online and transitions from construction revenue to recurring rental income. Second, capacity milestones. Watch for announcements about additional buildings reaching ready-for-service status at Polaris Forge 1 and progress at Polaris Forge 2. Third, new lease announcements. Any additional hyperscaler contracts would validate the business model and potentially unlock another leg high in the stock. Fourth, financing activity. If the company announces new capital raises or unfavorable financing terms, that could pressure shares. Conversely, successful debt refinancing or strategic partnerships will be positive. Fifth, the Corinthus liquid cooling technology. Pilot deployment is expected by late 2026 or early 2027. If successful, this could differentiate Applied Digital's infrastructure and command premium pricing. Before we wrap up, here's something critical you need to understand. This video is purely educational and informational. I am not a financial advisor, and nothing in this video should be considered financial advice or a recommendation to buy or sell any security. All the information presented here comes from publicly available sources, including company websites, press releases, investor reports, and financial data platforms. Applied Digital is an extremely volatile stock, and you could lose your entire investment. Always do your own thorough research. Consult with a licensed financial professional, and never invest money you cannot afford to lose. The stock market involves substantial risk, and past performance does not guarantee future results. Your investment decisions are your responsibility alone.